Federal Reserve System, the person that's entrusted with leading the Fed's mission.
Our individual projections for the appropriate path for the federal funds rate reflect economic forecasts that generally envision that economic activity will expand at a moderate pace in coming years, labor market conditions will strengthen somewhat further, and inflation will be at or near 2% over the medium term. In short, we currently judge that it will be appropriate to gradually increase the federal funds rate if the economic data continue to come in about as we expect. Indeed, at our meeting later this month, the committee will evaluate whether employment and inflation are continuing to evolve in line with our expectations, in which case a further adjustment of the federal funds rate would likely be appropriate. Nonetheless, as we have said many times, and as my discussion today demonstrates, monetary policy cannot be and is not on a preset course. As in 2015 and 2016, the committee stands ready to adjust its assessment of the appropriate path for monetary policy if unanticipated developments materially change the economic outlook. Families at the 10th percentile of the income distribution earned about 4% less in 2015 than they did in 2007, whereas families at the 90th percentile earned about 4% more. In addition, the economic circumstances of Blacks and Hispanics, while improved since the depths of the recession, remain worse on average than those of whites or Asians. These unwelcome developments, unfortunately, reflect structural challenges that lie substantially beyond the reach of monetary policy. Monetary policy cannot, for instance, generate technological breakthroughs or affect demographic factors that would boost real GDP growth over the longer run, or address the root causes of income inequality. And monetary policy cannot improve the productivity of American workers. We must remain squarely focused on our congressionally mandated goals. That refers not to our balance sheet, I take it, but to, now at this point, U.S. fiscal deficits, federal fiscal deficits, are at a level that should keep the debt to GDP ratio roughly constant for the next 5 to 10 years.
What would you project to be the biggest challenges for the U.S. economy in the next 5 years, for example?
I'd say, the global economy has been, as I indicated, a very important factor in the outlook for the U.S. economy. At this point, I'm pleased to be able to say that looking at the global economy, at least over the next few years, I see the risks as more balanced than I have in some time.